Well, good Monday morning and welcome to Connect, the California MBA's weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Dustin Hobbs, Communications Director at the California MBA, and it's August. The calendar has turned. We're now in August. We've got our Western Secondary Market Conference coming up later this month. And so this month, we're going to spend our time on Connect talking to some of the leaders in the residential lending industry. And we've got a great guest today. Excited to get into the conversation with him here in just a moment. But before we do that, let's thank our sponsors over at Incelerate. So Incelerate helps lenders close more loans through better borrower engagement. The mortgage industry's most innovative customer experience platform delivers lead management, sales enablement, engagement, a robust mortgage content-specific library, and data intelligence all in one comprehensive and highly scalable platform. Incelerate delivers dynamic technology, strategy, and content for every channel of your business to ensure engagement throughout the customer journey, whether that's with your borrowers, your referral partners, or any other party to the transaction. The dynamic enterprise solution seamlessly fits into your tech stack, whether that's your phone integration, your POS, LOS, servicing system, data enrichment, and that's all due to the advanced API connectivity, modern design, and open architecture. So gone are the days of managing multiple and separate systems like your CRM, your marketing automation, lead management, and having that data trapped in those silos. This innovative platform allows you to provide your internal and external customers timely, relevant information based on data intelligence to build repeatable outcomes at each stage of the customer's journey. So bottom line, with Incelerate, you close more loans, improve borrower conversions, and enhance customer retention, transform your customer acquisition lifecycle, and create customers for life. So to get a personalized demo, go to incelerate.com, or you can dial the number listed here in the description below. So before we get into the conversation, I want to toss it over to Susan Milazzo, our CEO, for this week's weekly update. Susan.
Thanks, Dustin. Hi, this is Susan with California MBA. And today I would like to talk to all of you in the residential mortgage lending space that understand the important role that technology plays, customer service, reaching those customers, and cost efficiencies within your company. Visit mortgageinnovators.com. Now, many of you might have participated in our conferences over the past couple of years, but now this is a site that's available to you every day of the year, and I'll give you resources and information on technology solutions for every aspect of the life cycle of the loan, including acquisition, origination, processing, closing, post-closing, and capital markets. So it's one-stop shopping for all of your technology needs. Visit mortgageinnovators.com today to find out all the information you need about what's hot in the technology space. Back to you, Dustin.
All right, thanks, Susan. Now let's get into the conversation. I'm excited to welcome in a friend of the association, Mike Fontaine. He is the co-president and COO of Plaza Home Mortgage in San Diego. Mike, welcome.
Hi, Dustin. Thanks for having me on today. Appreciate it.
Yeah, it's great to have you. Mike has been on our board of directors for a number of years, as well as being one of the leaders in the industry. And I think Mike's been at Plaza for quite some time now, so he's got a lot of experience and a lot of interesting insight I think we're going to get into here in a moment. So, but let's start, Mike, with your background here. What, for those that maybe don't know you well, how did you get started in the industry, and what led you to where you're at Plaza?
Well, been at Plaza over 17 years now, and I started actually as a CFO over at Plaza, and then my role evolved over the last several years into more of the COO, and then recently into the co-president position. I got started a little different maybe than some of the people in the industry. I didn't grow up in the mortgage industry like a lot of my peers out there. I was in a few different CFO positions at different companies, but primarily in CFO or senior management positions in other industries for over 30 years now, and started in finance background, undergrad, and management science, graduate degree in accounting, master's in accounting there. So little different maybe, though. I was involved in other industries, and prior to Plaza had about 10, 11 years in the distribution industry, and sold the company. And so after sold, I had to stay on for a year as part of that deal, and it was a large international organization that bought it, and realized I didn't really want to work in that environment anymore. So let them know I was going to move on after my required 1 year. And at the same time, kind of toward the end of that year, interesting little opportunity came up where I was able to meet with Kevin Parra, who's one of the founders of Plaza and is our CEO today still. And we met and worked it out, so I was able to join. But the funny little story on that, I guess, it maybe is so Kevin's daughter and my niece were in kindergarten together at the time, and they ran into each other over in Hawaii at a vacation, and my brother, who was my sales manager at my last organization, working for me, ran into Kevin, and they started talking. Kevin was saying, hey, I need a news. Look at my company's growing. Company only a couple of 3 years old at that time, and looking for a CFO. And my brother said, well, I know somebody's good. He happens to be my brother, but anyway, so we worked it out after that. And so I guess you could say my niece was my recruiter for the company. And then the funny part about that is she graduated college last year and came to work for us for about 6 months or so right after college, as she was trying to figure out what she wanted to do and working with kids as going forward. So anyway, small world, things kind of come around in odd ways sometimes.
That's such a cool story. I had no idea. That's really a cool story. Definitely, you had the youngest recruiter around there. That's pretty funny.
I think so, yes.
So this last year obviously has been, to say the least, a challenge. So I'm curious from your perspective, going through both the refi boom that we've gone through. I know that there's been a lot of growth at Plaza, and obviously the COVID pandemic here. What's been, from your perspective, the most important lesson you've learned, whether that's professional or personal?
Well, I think on the professional side, what this last year and a year and a half now almost showed me was how resilient people are and how people can adapt. And I think maybe going in, I wouldn't have given the opportunity if somebody had asked me 2 years ago, hey, your whole workforce is going to have to go remote immediately, literally with about a 1 day notice, and not figuratively, but literally a 1 day notice there. You're going to go remote, the whole company, and you're going to be able to succeed. And by the way, you're going to have the largest origination year in the history of the mortgage industry. It would have been no way. It's going to be a big failure. So, but what I did learn though is that people are resilient. They're able to adapt. A lot of the people that we had working for us that really, I think, were resistant, saying I can't do it. I'm not going to be able to do it. You fast forward now, and they're the ones that are saying, "Hey, I still like working at home." So it's great to see how people were able to adapt. We have an incredibly talented workforce, and all of our associates were really able to step it up and move forward. The industry, I think, did a great job also of adapting and serving the homeowners. The refinance business was incredibly strong with rates dropping last year, but they also were still able to maintain getting the purchase business done. And that was especially challenging when you look at the restrictions in a lot of areas on not being able to do appraisals or even meet with a closing agent. I remember walking down my street, seeing people signing loan docs, or looked to be loan docs, literally on the hood of a car a couple houses away, last summer. And I'm sure it was a notary that was over there, and they were trying to get the closing done. And it's just, people just had to deal with it and adapt. So I think that was one of the biggest lessons that I think I learned was people can adapt, people can move to new environments, and they step up to the challenge there. So on the personal side, I happened to get married literally 2 weeks before we shut our offices down last year. So it went from being single to having getting married and fully locked down for a year. So things are going good a year plus later. So I guess it worked out.
Yes, so you fast forwarded a lot of relationship steps there, where you had all that time during the day where you would have been apart and had your own spaces, and suddenly there's no private space.
There was no space, that's for sure. So yeah, but it's good. So.
Yeah, no kidding. So I'm curious here. Now you're one of the I don't think there's not that many folks in the industry in your position, I think, who went through the 2008 financial crisis and this one now. I think going years beyond, I think we're going to look back. These two were two of the most trying times in the last maybe 50 or 100 years of financial history. And so I'm curious from your perspective, how did the experience you went through in 2008, the worldwide financial collapse and the foreclosure crisis that drug on for a couple of years beyond that, how did that prepare you for what we just went through in the last, as you said, last year and a half or so?
Well, I think the 2007, 2008 collapse there was something that really had to adapt very quickly to, and things were changing overnight. And we saw that again this time. We saw a lot of change overnight. The very early stages of the pandemic and the shutdown of the offices. There was the big whipsaw in the market on the rates. So we went from 1 week, our hedge positions, and this is not just us, it's everybody in the industry pretty much, where the dealers were owing them a lot of money because of the market movement, to a week later, it was the other way around. And so companies were scrambling, trying to come up with money for margin calls and making sure that they were protecting their pipeline and still had enough coverage, and their volumes were starting to swell again. And so that was a big challenge for the industry. I think the industry did a great job of stepping up. I didn't hear about too many people that didn't make margin calls. I think that it was important for the industry to be able to do that. And what it showed you is that you have to really be willing to adapt and to understand what's going on. And one of the lessons with that, and I think that a lot of people really need to think about, is communication. You have to communicate with the dealers you're working with the investors that are out there, with the warehouse banks, and having those relationships and being honest with them and letting them know where you stand is incredibly important for any business leader to make sure that they are communicating and being honest and say, hey, here's my plan. I have a plan. This is what I'm doing. But also, you have to plan for worst case scenarios all the time. Like, I don't think anybody thought that there could be that much margin and interest rate swing in a 7-day period. It was certainly towards the outer edges of what would be expected. And with that, people had to look into what the resources were. So I think that was a big lesson on it. One of the other lessons that I've learned over the years, and it's not just really those two events, but everywhere in between, there's been a lot of ups and downs in the industry, is you have to make sure that you're able to serve your customers, and you have to make sure that you're providing the staffing and looking forward to provide staff, the right level of staff, but not be too overstaffed at the same time, because margins are thin in our industry, and that's important to make sure you're watching the cost on it, but at the same time being able to serve the customers and get the loans closed for them. It's the importance, especially in a purchase environment, is even more important to make sure you're closing on time. You're not delaying closings. Refinance, if it happens a couple of days later, it's less of an issue, but it's still an issue. It's a reputational issue that people need to deal with, and really that's something that we take seriously and are always on top of. And I think it's important to make sure that you're maintaining the correct staff and watching your expenses. Last year the industry did well, but you still need to watch the bottom line on that. So
yeah, absolutely. So I mean, you mentioned you're kind of getting into some people issues there, and I think it's it's important, an interesting question to ask you, so especially someone who has been at the company for as long as you have, and you've kind of seen it rise from being more or less a startup to where you're at now. How have you guys built that culture at Plaza? And I mean, I've seen, just from my vantage point, you guys have been members of the California MBA for as long as I've been here, and so I've kind of got to watch from the sidelines as you guys have built the culture and built the company up. But just from your perspective, how has that process been, and how have you dealt with that over the past year or so, with everyone suddenly, as you put it, on a one-day notice, having to work separately and essentially don't get to see each other except through Zoom for the last 18 months?
Yeah, so I think our associates did an amazing job of stepping up and wanting to do the right thing, but the culture is critical. I mean, culture is hard to maintain for sure when you're in this Zoom environment or doing video calls or audio conference calls or whatever. It's really much more challenging, I think, to do that. but it's communicating with them, letting them know what's going on. In this particular situation, it was a little more challenging because really none of us had been there before. So we didn't have okay, this is what happens when a company has this event happen to them or something. It was a new.
Was it in the handbook, huh?
Game, right? I mean, none of us knew what tomorrow had coming on it, and what, so much stuff outside of our control was what was going to happen, and where should you allow people to do this or that? And it's like, I don't know. It's so, and I was honest. I'm like, look, I haven't been here before. I'm trying to do the best that I can to lead you guys and guide you, but there's no textbook I can go back to and say, hey, this is what you should do in this situation in an environment like this. So we worked as a team, got a lot of input from our management group, and they did a great job. We had regular meetings. We communicated everything out that we could to the associates. We also tried to keep them engaged from a cultural standpoint. Keep reminding them that they work for a great organization and that they're a major part of that organization. They are our biggest asset. Without our people, we don't have an organization. So we know that, and they know that. And we tried to continue to remind them of stuff, did things for them, and tried to do something for them every month that showed that we cared and that we appreciated their efforts. And that was really one way to maintain the culture. It was difficult. I personally like to be able to walk around the office and say hi to people and interact and find out what's going on, and just chat with them for a couple minutes and make sure that they know that we're accessible. We're a relatively flat management organization, I think, for the size of the company, and our doors are open. So they know that they can approach me or one of the other executives of the company and talk anytime. And so it was tough. It was tough on me personally to not be able to say hi to people and to see them, except for on the Zoom calls, and you just don't have that same interaction. But now that we're back in the office, it is nice. We've been back now for about a month and a half, and it's good. We're on a hybrid work environment now, so most people are coming in 2 to 3 days a week and then working at home the other day. So they're getting used to that cycle, but it's also good because I think they're starting to feel back like they're part of the company again, and able to get back into more of a routine than this what was temporary but became a 15, 16 months whatever deal there of not so temporary environment. So it's nice to be back, and nice to be able to see people face to face without having to see them through a computer screen all the time.
Yeah, no, I'm sure. And I think you make it's an interesting thought experiment where, so much of executive leadership and just leadership concepts in general all focus around the interpersonal, interaction that happens in a face-to-face environment. And so much of theory about how to lead an organization and how to build organizations, and from the people perspective, is all built around, seeing people face to face. And I think it's really been interesting to watch organizations last year. And I think we'll see in the coming years, when you look at employee retention rates and stuff like that, how well these cultures were saturated, how well they were, I guess, rooted in the employees themselves. And if they were rooted, then they survived. The culture survives the time apart. When you come back together, you can, that glue is still there, that culture is still there. And then the companies that didn't really have a deep abiding culture, something that was more just kind of for show, I think it's going to show up in the next couple of years. So I think you make some good points there.
Yeah, we definitely feel that it's really one big family and environment there, and nobody's just a number around here, and we care about the associates. We want them to feel part of the Plaza family all the time, and they know that they are a big contributor to our success, and it's really a mutual success. Our success is their success as well. So we appreciate all the efforts, and I think we have a great team. They do an amazing job.
Absolutely. Well, let's switch gears here for a second. So, as the industry is the industry is transitioning from, as we've talked about, the refi boom that we've been in the last couple of years, back to more of a purchase-focused market. What are you guys doing as far as a strategy? What's changing from your perspective?
Well, so it's interesting on that area for us because we've always been a very purchase-oriented lender. So for us, it's actually getting back to our kind of our roots and our where we really shine on the purchase side there. And that's because we spend a lot of time and effort on educating our customers, which we're almost all third party. So it's the brokers and bankers that we're working with that we're educating so that they can help make sure that they're putting the consumer in the right loan for them, especially in the purchase market. So we offer programs that are really focused on first-time home buyer programs and 203Ks and home styles and even the reverse mortgage for purchase we offer. So definitely programs that are very focused on purchase business, and that's really where we have always focused our efforts and the realtor relationships that go along with it, for the loan officers that are working with the brokers and the bankers that we work with. So helping support them is really the key on that side. And so with that, we do a lot of education and training. We have an incredible training department. We're always putting out webinars and seminars and training events constantly so that we can educate the industry and our customer base so that they can really provide the right loan product for the consumer on that. So and with that also we do a lot of government lending too. So the VA, USDA, FHA loans, we have a lot of experience in that area, and with that we're able to really help the home buyer on that, because a lot of those are really geared towards the purchases as well as the low to moderate income that goes along with some of those loans. So it's a area that we look forward to being in a purchase environment.
Yeah. So as you guys are working to get back to your roots there, like you said, your wheelhouse in purchase, and you're looking at some of the economic factors that kind of feed into data-wise, input-wise into those decisions. What are you guys looking at other than the obvious ones like interest rates or sort of those obvious market factors? What do you guys look at as far as maybe having the biggest impact on the market here, maybe in 2022, say, looking far ahead in the future?
So I think just if you look at the overall economy next year, I think that outside interest rates, the kind of the normalization, hopefully, maybe I'm just hopeful on this, but with the normalization of the supply chains worldwide, this pandemic has really caused a disruption in supply chains. You look at things like shipping costs right now are skyrocketed for boat travel across, from the Orient to the U.S. as an example. Freight costs are double or triple or even further than that on it there. But then also things that have really been disrupted that you wouldn't really think on the surface would be so disruptive. Things like the chip shortage that is causing automobile industry to really have a struggle right now. You think, well, what do you mean chips? I mean, that shouldn't be a big issue, but cars have hundreds of chips in them now, and so that's a big disruption. I mean, go drive by any car lot now, and it looks like somebody stole half the cars, and nobody's there. It's weird. There's not a full lot anymore, and so hopefully by next year that stuff will start normalizing. People will be able to start buying stuff that they would normally expect, and that will tame inflation. Or it should tame inflation at least, hopefully, because we have seen a lot of inflation recently, but it's that's the transitory inflation that they've been talking about at the Fed level, and that's again supply chain oriented, I believe, at that level. So outside interest rates, that will help, and then in the housing side of it, which will help the housing part is the supplies that go into manufacturing a house also are starting to come back. Some of the lumber prices are coming down a lot now again because the mills are getting back online. So those are big factors there, and then the labor shortage really that's going on housing should hopefully normalize the next several months here.
So one of the factors that you kind of briefly touched on there, but I think is definitely a big one, and it's actually been in the news in the last couple of days, is housing inventory. Seems like we've got a little bit of relief from some of the latest figures that are out. But do you think that are we on the verge of seeing a big increase in supply, or are we still going to see tight inventory for the foreseeable future?
Unfortunately, I think we're going to see a tight inventory for the foreseeable future. It's we're getting a little bit of relief, like you said, on some of the supply, but it's a multi-year lack of supply compared to the demand, and it's been going on for over 10 years now, where we're producing less than the demand each year. So each year it gets further and further away from being in sync or supply and demand on an annual basis. So it takes a long time for that to come back around. The new housing, it takes years in most markets to go from, okay, we're going to build in this environment to actually putting sticks in the ground, and especially in places like California, where it takes a very long time for the development process to come around on it there. So unfortunately, I don't see a lot of relief in sight. It's just we're in a big hole from a supply and demand standpoint. So it's looking like prices are going to settle a little bit, but I don't anticipate them going down. It's just maybe not quite so fast as they've been going up. I mean, the inflation over the last 12 months has been far outpacing annual overall inflation from a housing standpoint. So
maybe we'll go from white hot to red hot, huh? At least that would be somewhat of a cooling, at least in the rate of growth there. So last question, you're starting to get a little tight on time here, so we got time for one more question. And I know that you're like I said at the outset, you've been a big supporter of the California MBA for a number of years and the National MBA. And so I'm curious, if you're talking to a colleague who's in an executive role at another lender that's not a member of either the National MBA or the California MBA, what's your pitch to them as far as why they should support the advocacy work that both groups do, both in Congress and then here in California in Sacramento?
So I think that's a great question. I believe that both those organizations really are supporting our industry, which is really where our paychecks come from, and it's important that we provide access to credit to the homeowners out there, and the advocacy work that's done by the California MBA as well as the National MBA and the other state MBAs is critical to make sure that we're providing fair housing rules out there that protect the consumer, but at the same time don't provide irrational rules where the lenders can't lend and are not being treated fairly as well. And it's that because if they're not, because the lenders feel like they're not being treated fairly in the situation there, then they just have to increase the price to the consumer to cover that. And so that's one of the things that I think gets lost a little bit sometimes when legislation maybe get proposed, and that's where the advocacy of the California MBA as well as the National MBA and the Mortgage Action Alliance and then other state MBA programs really come around to help open the eyes of the legislators to make sure that they're not proposing stuff that's going to limit credit and where they may think on the surface that it's increasing it. So it's important that we advocate in there, and that's the best way to do it is by being involved in your state and really in the National MBA, and then also with Mortgage Action Alliance as well.
Yeah, no, I think that's good. And to your point, I think that it's very much about the advocacy work is very much about education, and it's tough to expect legislators to be experts in how because the mortgage in the financial world itself, but mortgage in specific is so intricate and any move on any push on one side, there's going to be reaction on the other side. It's very tough to tell from a legislator standpoint if I'm not if I don't have a background in the financial world, or if I don't really have that baseline of education on how it works, then it can be really tough to know if I'm just trying to protect consumers, so I'm going to propose this bill, And it's very helpful then for advocates, both whether that's again in Congress or here in Sacramento, for our advocates to go in there and explain, this is what will actually happen on the ground. And here's, and then we put you in touch with one of our members and they can actually explain to you because they do this every day. So I think you make a good point there. Well, hey, Mike, great to chat with you. Great to see you. Hopefully we'll see each other in person here at our Western Secondary Market Conference. If you're not registered for that already, definitely do that. You can go to westernsecondary.com. The conference is going to be live and in person in Dana Point on August 24th through the 26th at the Waldorf Astoria Monarch Beach Resort and Club. So definitely invite everyone to join. I think that'll be a great event, and I think there's some pent-up demand for handshakes. So I think we'll all be looking forward to getting back in person. And Mike, look forward to seeing you then.
Look forward to it. Look forward to seeing you there. Thanks, Dustin. Thanks for having me on. Appreciate it.
Absolutely. And if you enjoyed the conversation here, make sure and subscribe to us on our YouTube channel. You can also find us on Apple Podcasts, SoundCloud, Spotify, and we'll be back again next week for another episode of Connect. We'll see you then.